Alright, it's time to start our quarterly rendezvous with the management of TCS, and boy oh boy, when numbers came out yesterday, everyone on the street was excited that it's been an all-round growth, it's been a good quarter, and it's been a good start to the earnings season. So what is the way forward for FY19? To understand that, to dissect that, let's connect with the top brass. We've got Rajesh and NJ. Gentlemen, thank you for joining us. It's been a good quarter of all-round performance, so congratulations on that. I was struggling to find fault lines as always. But before I talk about the quarter gone by, Rajesh, TCS is a $100 billion company. It happened after your last quarterly number. So what was your first reaction? $100 billion company. I'm sure you saw the news on ET Now. But when you saw on ET Now, how was the reaction?
Quite frankly, the reaction, oh wow. But yeah, it's in many ways a big milestone. Huge milestone for us. I don't think we planned for it or even anticipated it, but we're happy where we are, and I'm happy with the trajectory that we see.
You know, I've been sharing this with my viewers that the growth what TCS has reported in last 2 quarters, it has silenced a lot of naysayers, a lot of doubters who were doubting about the change of guard. So for you personally also, it's been great, right? All the doubters now suddenly who raise question marks about the leadership change, now suddenly I don't find them.
Nikunj, but most of the doubt was actually about the strategy and about the company's choices. I think the leadership change happened quite smoothly, and as we had said, Chandra has become the chairman. It's not that he is dissociated from TCS. It's been a fairly seamless experience. I think the bigger questions were whether our strategy for organic talent development, organic growth, is that right? Are we being risk averse? Are we being hesitant? And in all of those, we have come out and shown that our strategy is right, and our ability to lead with our Business 4.0 framework to participate in the growth and transformation agenda, that's where the big validation is coming from. Personally, that's what gives me a lot of satisfaction.
You know, personally, what gives me a lot of satisfaction is that I've been tracking the TCS journey before it went public. And to see a company which you've tracked for the better part of your career now becoming a $100 billion company. So as member of press, it's very exciting for us to see an Indian company reach that mark. So for me, that really has been the ultimate motum. NG, I'm coming to you, with some pointed questions. But Rajesh, I was looking at your 8 verticals, and the quarterly growth has been between 3% to about 5.9%. This reminds me of a purple patch TCS had in FY15, when there was growth which was all-round growth.
Yeah.
Minimum was 3%, maximum was 6%. So am I true in assessing that?
Purple patch or not, we'll have to give it a couple of quarters, but yes, we are, from where we see it, I think we are now in a good position. As we had said, there were always few areas of weakness. I think this year definitely we should see very broad-based growth.
And just whereas analysts would be fixated with 1% here, 1% there, that's how they'll arrive at the fair value for the stock. But in terms of in communication, based on what you've done for the last quarter and this quarter, which is equally important, double-digit growth is the new normal now for TCS.
Yeah, we have always stated that we are, as a management team, we are extremely focused on getting back to double-digit growth. What has changed in the last about 3-4 quarters is really about our thought leadership framework on Business 4.0, which actually drives growth and transformation, number one. Second is that we are so fixated about driving business outcomes because of the end-to-end capabilities that we have built, leveraging a suite of digital technologies and offerings. I think that positions us well, and I think the results of Q1 sets us very nicely to give it a best shot at a double-digit growth.
So the kind of momentum what you've reported across verticals, is that momentum here to stay for FY19? Because Q1 is a good quarter, but will this translate into the second half also?
And I think so, because we have a very strong deal booking. We have announced something like $4.9 billion of order bookings in Q1. And the deal pipeline looks good, and it is very, very broad-based. America is growing. It has grown by 3.7%. UK is firing all cylinders. Continental Europe is growing. Asia Pacific is growing. So, and across verticals we see opportunities, and they're all across the both traditional as well as digital services. And we are very actively participating in the growth and transformation programs. All this gives us the belief and confidence that it is sustainable. And as Rajesh said, that we have to give it another 1 or 2 quarters to actually conclude that we are in a purple patch.
You know, I was looking at a tape about a year ago when I was preparing for the interview last evening, and generally the sense which I got from the management a year ago was that this kind of an growth was ambitious. This kind of an growth was what TCS was targeting. Now it's real. So frankly, are you surprised with the market turnaround? And if the market is turning around for TCS, is this because market size is growing, or is this because you're gaining market share?
I wouldn't say we are surprised by it, because as you said last time also, said our target was to get to double digit. We inherently had a very strong confidence that this is doable, but of course, you know, the proof of a pudding is in the actual execution and the delivery of it, which is why we've been calling it, saying that we are seeing growth tick up and we're quite confident about getting back there. So that's one part of it, that we are not technically surprised. We are very pleased with where we see ourselves, but it has been something that we've been working towards diligently over the last almost couple of years, if it were. The other element of it is that where is this coming from? Yeah. It's not. It's a much more heterogeneous market now. It's not a very straightforward one that it's a head-to-head against a single one. We have a diverse set of competitors across various theaters, both from industry perspective, geography perspective, or service lines, and we have been consistently winning across. But the most important aspect of it is something we have discussed in the past with you also, which is the ability to stitch together composite deals, which cuts across all the way from core engineering to front-end interactive work. And that, I think, we are uniquely positioned. We probably have the best portfolio of end-to-end services, and our clients are seeing a lot of value in having a single person be able to deal with the full portfolio.
We are spending a lot of time discussing quarterly numbers, but I also want to spend a minute, Rajesh, with you to understand the buyback policy. Second buyback is at play. So whatever regulation is allowing you, you are now committed to give money back to the shareholder. So is this the new TCS, that whenever regulations will allow you to, let's say, come up with a third buyback or the fourth buyback? I'm not so sure of the regulations here. I understand till the second buyback. But whatever the regulation will permit that, you would consider a buyback? Will that be an ongoing process?
So think about it as a capital allocation policy. What we had said, that 80 to 100% of our free cash flow we will be returning to shareholders, subject to any one-off big-time acquisition one. And overall, what we have found is that there are a diverse set of shareholders. Some prefer dividend, some prefer buyback. Broadly, what we have done is we have kept it as about 50-50. Sometimes 45-55, sometimes say, but approximately 50-50 as the two channels of it. If regulation allows, technically the buyback channel is constrained by the maximum cap put by the regulation. If regulations are more open-ended, then we will look for the most tax-friendly means of capital distribution. But otherwise, overall, the 80 to 100% band stays, and a mix of channels for capital distribution will be always a preferred way.
Yeah, so that's an important communication, and I don't want to get this one wrong, because if you're a shareholder, you would say, if buyback is going to be constant as per the regulatory approvals, that means I'm looking at a lot of cash coming back. I'm also looking at my return ratios improving, and that in a sense normally expands the P multiple of the stock. That's how markets value a company. So the communication from you is that whatever you are allowed to do in terms of giving cash back to the shareholders, you will do that.
Absolutely. In fact, I'm glad that you mentioned it. So yesterday we didn't call it out. If you look at all our capital return ratios,
that's why.
It's all of them are looking very good. Yeah. Primarily coming from both an improvement on the top line, the numerator of the returns, as well as the denominator, which comes from the capital return policy.
And just, do you think the fact that TCS moved into the digital space first, it's more than 1/4 of your total business, has been the differentiating factor for TCS? Because if I do the absolute comparison, you're growing. If I do the relative comparison on both the accounts, you're growing. Is this the digital strategy which is differentiating, and can you grow at this rate?
And I think so. I think one is that we got in first, number one. Second is we took a very basic call that we will grow the talent organically. We said that, look, the contextual knowledge that we have, our people have, cannot be ignored, and it is better to train them organically and then make them digitally savvy, and that will set ourselves nicely for the wave 2 of the digital transformation that is taking place, and where the digital core is in the main and all the other things are surrounding the digital core. So the cloudification, the APIification, I mean all of that, right? With the TCS Interactive on the front, it's a compelling, differentiating proposition in the marketplace. And I think, certainly that's a differentiator, and that sets us very nicely to participate in business outcomes driven transformation programs.
A couple of quarters ago, Rajesh, we would talk about volatility in India business, volatility in LATAM business. The word diligenta was missing in the press conference yesterday. BFSI vertical, yes and no. There was volatility in retail, but there is no mention of any blind spot. Is the business is the visibility absolutely crystal clear? Crystal clear is the word here.
Blind spots by definition are the ones that catch you when you're not looking at it. So again, as I said, from what we see, things are looking
Why
good.
are you sounding so bullish? What has changed? I mean, I'm excited that you're sounding bullish, but why are you sounding so bullish? What has changed in last 3-4 quarters, which is compelling a conservative management to come out with a bullish commentary?
I think the big change or turnaround has been the two big segments. So if you look at North America, which was 50% of our revenue, and BFS, which together is 30-40% of our revenue, both of them have swung around. So while they are still growing at a slightly lesser number than the company average, but the swing in their performance is where the confidence and the bullishness is coming from.
And just really at a big picture level, and digitization also has an element of artificial intelligence. It also has an element of data mining. If I look at what a Google, Amazon, Netflix and the others have to offer, they pretty much are saying the same language. We are doing artificial intelligence, we are doing data mining, we understand the customer. Are you reaching that level where you suddenly will start competing with the top 3-4 companies?
And I don't think so. I think, they are, certainly, they have the tools, they have the cloud, they have the infrastructure. But then what they don't have, what big companies like TCS has, is the domain knowledge, contextual knowledge, and that combination is very important, right? So from our perspective, I think the artificial intelligence, machine learning libraries that one has, whether it is from Microsoft, whether it is from all the other players, and coupled with our Ignio platform, where we have invested very heavily on the artificial intelligence front, I think we are well positioned to leverage the automation for better outcomes.
Okay, so one 30-second answer and then we go to wrap because of compulsive factors. For years, IT companies follow trajectory. First half is stronger, second half things slow down. That time digital business was not there. This time digital business is there. So do you see some kind of a change in terms of the trajectory which you are likely to follow for FY19?
It's I think the trend seasonality will stay irrespective of what, whether it is digital, whether it is this, and if it doesn't stay, it's even more acceptable and it's good for us. That will be icing on the cake.
Rajesh, normally when I wrap an interaction with you, I give you the choice of words: cautious, careful. But this time, I'm assuming that you're excited, and we'll wrap it with that, right? $100 billion, great work, guys. Thank you, and look forward to much more engaging interactions going forward.